There's so many ways that you can mess up your trades, even good trades, that I cannot even begin to explain. In this video, I want to show you, I want to do this like a little bit of a trade journal for myself, but also to show you the different ways that you can really mess up while you're managing a trade or you're entering it or so on. And funny enough, we're going to talk about crude oil. I've never traded crude oil, but what I decided to do is obviously look into some other asset classes that potentially in the crypto bull market might be doing better, or at least have more setups to work with. It turns out that there is other assets. Obviously, it's because I've been only crypto and I've been obviously brainwashed for only crypto, but there are other asset classes that also trade reasonably well, and there could be setups there. And I just took one on crude oil a few weeks ago, and I wanted to walk you through this. So very basic bread and butter for me setup. So we had a level losing momentum. The price has been losing momentum for quite a while now, so for years. But we reached this key level around $66 on crude oil, and we had a few reactions here on the weekly. So pretty much I spotted this so somewhere around here. So on this candle, this big beginning of March candle, we had several weeks of red into support, and I was like, okay, this makes sense. If it's gonna bounce, even if it's for a lower high here, this should bounce from here. And the next week, the trade just got confirmed because we got another wick to the downside and another close within this range. So I decided to take a stab at oil somewhere around here. And I'm sitting comfy in profit right now. Actually, the original trade was something like this, so my stop loss was below these lows. And now I just moved it here because we had a bit of a change in structure here. So we shifted to higher highs, higher lows here on the lower time frames on the 4 hour. I just moved my stop here, and I really don't want price to come down below here again in order for the trade to stay intact. And while I'm doing this, because it's been taking weeks, I've been like, this looks still good, and I was even considering adding more size here. And this is where the trouble comes. Because I was like, I didn't size this big, because first of all, it's the first time I trade oil, and I never trade oil, so I don't know the asset class, so it makes sense from a risk perspective to not go big. So I'm trading relatively small size, and I'm in profit, and now I'm like, it's working in my favor. Do I want to put more risk? I want to make more money on this. I'm genius for taking this trade. You know, all the mental stuff that's going on here. It's like, let's put more risk on because you're right and you cannot be wrong. However, you know, when you do a process and when you have a process of, let's do the pros and cons of this trade, and maybe, okay, you got a trade here, but this here is a new trade that you're looking into. So let's go over it and let's see what are the pros and the cons for this trade. And the first pro, maybe the only pro, is that very clean break out of this trend here. So you can see this from January so for 3 months, we are in a downtrend pretty much in this market with several touches. And now clearly we had very good reactions on the daily. So yesterday, actually that's on Friday, we had a close just above. So we wicked down, we closed above this, and then today we see the continuation of this candle right here, and the potential showing of strength at least into this bigger trend line on the weekly that I'm looking into. So this is one trend line here on the daily, and the big one is obviously here where I'm targeting to take profit, obviously, for my original trade. So I'm like, okay, this is still showing signs of strength, even though it's going higher from where I'm in. And do I want to enter here? And what will be like my risk to reward here? So these are the cons that we have strength and breaking out of this structure. However, the cons in this case, what could go wrong with this trade? So technically, if I enter here, or let's say I could have entered earlier yesterday or today, and like, where do I put my stop loss? Where do I want the stop loss to go? Is it here on this break back into structure? I doubt it, because like if we zoom out, basically I'll be buying I'll be selling into resistance in this entire area. So technically, my stop loss should remain somewhere around here, and into here, like where my original profit target is, which I believe is still valid. This is like 2 to 1. So not a terrible trade. But will I be risking? Because if I add risk here, this means that if price goes against me, I'll be underwater at some point on my cost average. Because if my cost average is somewhere around 66, so originally it's, let's just use the green arrow. Somewhere around here I entered, and if I put another buy somewhere around here, if I had put another buy, so my cost average will go somewhere into here for the entire trade. So I was like, do I want to risk this much and pretty much mess up the entire trade, or I just want to stick to my original positioning? And even though this technically is working in my favor right now, and I should have added, I decided not to, because another con on this is that it creates, in my opinion, bad habits. That when you see something, that when you see that you're in profit and this wasn't part of your original plan to add on this trendline break, now you're adding stuff and making up stuff just because you're getting cocky and just because you believe this trade cannot go wrong. However, obviously the market has many ways of proving people wrong. And second of all, it's like you size this accordingly of your risk tolerance, but also of your knowledge and experience on the market. So if I'm double up here, this means I'm introducing a lot more risk into a market that I don't know, and I don't know very well. And I'm not sure that this is a good idea, because yes, now it's all nice and dandy, but let's say price goes against me and I'm a little bit under water here, but the P&L value as money is something that I'm not really that comfortable with. So another con is that, you know, the monetary amount that I'm risking will increase, and potentially the percentage gains that I could make are lower because I'm increasing my cost average pretty much. And I'm just walking you through my process here, and I just wanted to share that technically I've decided not to enter this trade. We'll see what happens. You know, maybe we get something like this. Maybe you know, we retrace, confirm this somewhere here for a lower high, and then we continue, which could take probably days, weeks, whatever. Maybe then I will reevaluate and again go through the pros and cons of a trade coming in here. But right now, I just don't believe, for my risk tolerance and for everything, is a good idea to add more risk into this market. So yeah, I hope guys, this is useful for you. Because I know how you can feel when everything is going up or your trades are going up and you believe you're unbeatable. But it's very, very important to have like a checklist, obviously to have the discipline. I've talked about this extensively, to have the discipline to keep to your plans original, and obviously to have the understanding of the markets, and to know that there will be another trade. Doesn't matter what happens with this one, but there will be another trade. And if you don't have the right habits, you'll probably fuck up the other trade as well, not only the one that you're evaluating right now. Yeah, so that's everything, guys. And if you have any questions, you know what to do.